Welcome back to another video. In today's video, I'll be covering the super investors buys this quarter. So the first super investor that I'll be covering is Warren Buffett. I mean, he's the greatest investor of all time. And in this quarter, he did something that was quite interesting. So he trimmed his Apple stake, he trimmed his Bank of America stake, he trimmed another company which is Davita Healthcare Partners, and he bought into a few positions that are quite interesting. So he bought Constellation Brands as usual. He thinks the company is undervalued. He bought into United Healthcare, which is quite interesting. He bought into Domino's and he bought Pool Corp as well. So the three other positions that he added this quarter was similar to what he added in the previous quarter, but his United Health position is the one that is particularly interesting. As for his Apple stake, he has been continually trimming that position. At one point, Apple made up nearly 50% of his entire portfolio, and it is currently only 22%. So he clearly thinks that Apple is maybe a bit overstretched in terms of its valuation, or fundamentally not as strong as what it was back in the day, and that's why he's been trimming his Apple stake. So post 13F, United Health is actually up around 10%. It is currently trading at post 13F of around a 12 to 13 times earnings, giving you around a 3% dividend yield. So for United Healthcare, the stock was extremely undervalued at $240 a share. I think even today, the stock is still undervalued. If you have to do a discounted cash flow analysis of United Healthcare is seemingly still extremely undervalued. So that's why I think Warren Buffett added to his position. And for United Healthcare, it is short tail insurance. So short tail insurance can typically be repriced in about 1 to 2 years time. So their margins may be compressed today, but next year, they are planning to increase prices by upwards of 20%, and that will help with their margins overall as well. So for United Health, I think it is a quality company that was trading at a decent valuation. I think it still is trading at a decent valuation, and that's why Warren Buffett added to his position. The next super investor that I'll be covering is Mohnish Pabrai. He's the Indian Warren Buffett. He's more of a value-based approach guy, so he buys deeply undervalued stocks, hoping for upside, hoping for a catalyst event to drive the stock prices high. So in this quarter, he added to 4 of his positions. He added into Warren Co. He added into Valaris. Valaris, I think it's a shipping vessel company. He added into AMR, which is another coal company. And he bought a new stake into this company called AutoNation. So AutoNation is a car dealership. The stock price has been depressed over the last few months, and that's why he added to his position. He openly shared it on his show that he thinks that all these car dealerships are extremely depressed right now, and the mean reversion will definitely bring the stock price a lot higher, and that's why he added to his position. As for Mohnish Pabrai, his biggest bet is Warren Co. I actually own the company as well. Warren Co. year to date is up around 11%. It is currently trading at a 79 times of earnings. So for Warren Co., the thesis is an extremely simple one. It's just your coal prices reverting to the mean, that's one of them. And then the second one will be the opening of their blue creeks. So when your blue creeks becomes operational, fully operational, you can expect to see revenues increasing by 75 to 80%. And that's why Mohnish Pabrai has been adding to his position in all these different coal stocks over the past 1 year, 2 years, and so on. And he's probably bearing the fruits of it right now. The next super investor that I'll be covering is Terry Smith. So Mohnish Pabrai is the Indian Warren Buffett. Terry Smith is the English Warren Buffett. So for Terry Smith, his performance historically has been very good. He's a super investor that is touted to be one of the higher quality ones out there. But in recent years, his performance has been lagging behind the market. So in this quarter, he sold a lot of different stocks here. He likely sold them because of redemptions. So people are pulling money out of his fund because he's underperforming. And that's why he's having to sell the stocks to basically fund the assets that is being pulled out. But for this quarter, he added into 2 companies, Wolters as well as Intuit. So Intuit is a software company in your tech space, and for Intuit, it is basically a monopoly in that space. I mean, the only competitor is the government themselves. Until the government release an actual platform that is usable, that is integratable, I think it is impossible for you to disrupt Intuit's entire moat. And the other company that he added into is Wolters. So Wolters is a company that sells animal pharmaceutical products. It is less regulated compared to human drug products, and Wolters has a decent portfolio of products as well, and that's probably why he added to his position. Terry Smith has other positions as well outside of the US, so he owns a substantial stake in LVMH. He owns a substantial stake in Novo Nordisk as well, and those 2 stocks have been hammered over the past few months, and he's likely underperforming the markets again. That's why he's having to sell a lot of these stocks to make up for those redemptions. The next super investor that I'll be covering is Chris Hohn. Chris Hohn is one of the greatest ones out there. He is a highly respected investor. His investment methodology as well as philosophy is quite incredible. So what he does is he buys high quality compounding machines and then he holds them for a very long term. He builds highly concentrated positions in those companies to make sure that his wins are extremely large. And he buys high quality companies to make sure that the downside risk is almost minimal. So for Chris Hohn, this quarter he did some buying and some selling. He sold a bit of GE, he sold a bit of Canadian Pacific, he sold a bit of Canadian National Railway, and he sold Google as well. So he trimmed Canadian National Railway as well as Canadian Pacific, likely because of the tariffs. So the tariffs are having a tangible impact on all the different railway companies. And he added his trims into other positions like Microsoft, like Visa, like Moody's, and S&P Global as well. As for Google, I think he's trimming the position simply because he thinks that Google is one with the highest disruption risk in his entire portfolio, and that's why he trimmed his position. So for Chris Hohn, his notable add this quarter is Visa. Visa is up around 9% year to date, currently trading at a 33 times of earnings. So for Visa, they had a decent quarter as well. So the net income rose by around 8%, earnings per share went up by 12%, and there was no reason for the stock to sell off on this earnings. But of course, with Wall Street, the stock sold off. And the fact that Chris Hohn is adding to his position means that the stock is attractively priced. I agree as well. And that's why I added into Visa just a few days ago. The next super investor that I'll be covering is Seth Klarman. So Seth Klarman is a catalyst-based investor. What he does is he buys super depressed stocks, then he holds them and he swings them as well. So for Seth Klarman, he did a bit of buying this quarter, likely during the April dip. So he bought a substantial stake in Google. He bought another company called Wesco. He bought CRH. He bought FIS. Dollar General as well, which is quite interesting. He bought Restaurant Brands International, and he also bought a substantial stake in Elevance Health, as well as Pfizer-V. So for Seth Klarman, he's been decently accurate with his Google stake. So he's been trimming when the stock goes up, and then he's been buying when the stock price gets depressed. And in recent times, he's been buying a lot of Google. He's been buying them at a very good time. And he added to his Google position last quarter as well. So Google was trading at a 16 times of earnings last quarter in April, and there was no reason for the stock to be that low in terms of valuation, and he likely added during that time because it was a stock that provided asymmetrical upside. The next super investor that I'll be covering is Pat Dorsey. Pat Dorsey is a Morningstar moat creator. He was the one that came out with all the different types of moats, like wide moat, narrow moat, no moat. He was the one that came out with it. And for Pat Dorsey this quarter, he added into a few positions. His portfolio in general is decently high quality, so he owns high quality positions like Danaher. He owns Meta, he owns AutoZone, Google, ASML, Booking, as well as Wix. So this quarter, he trimmed his Meta position as well as his AutoZone position. As for his buys this quarter, he added into Danaher, he added into Google, he added into ASML as well. He doubled his position in ASML, which is quite interesting. And then he bought into Booking as well. So for all these companies here, I think they're high quality. ASML in particular is a high quality stock that is trading at a depressed price, and that's why he likely added to his position. As for Booking, I think it is a decent quality business as well. It was previously neglected by Wall Street, but currently you're seeing different super investors buying into these few holdings. So the next fund that I'll be covering is one that is relatively new. This fund is called Triple Frond Capital. So for Triple Frond Capital, if you have to look at their positions are decently high quality as well. So they own Microsoft, Meta, Amazon, Google, ASML, Lam Research, TransDigm, Charter Communications, CCC, as well as Moody's. So this quarter, they added significantly into two positions while trimming one. They added around 40% of their initial position in Meta, and they trimmed TransDigm. They added into this company called CCC as well. As for TransDigm, it's a decently high quality business as well, and he likely trimmed it due to valuation concerns. The next fund that I'll be covering is Lindsell Train. So Lindsell Train is a fund that has been matching your S&P 500. At times, it has outperformed the S&P 500. And this quarter, they added significantly into a few positions. So they trimmed a lot of their positions this quarter. They trimmed TKO Group, they trimmed Intuit, they trimmed Disney, they trimmed FICO as well, and they trimmed Mondelez. As for the positions that they added into Google, they added into Thermo Fisher, as well as PayPal. So the Google and the Thermo Fisher add is quite interesting. This fund added around 8% of their entire portfolio into Google. I mean, they probably added during the tariff dip as well. And this is a vote of confidence by all your different super investors with regards to Google as well. Last portion, I'll be covering some questions left in the comments. So the first one, it says, "Hi Guan, are Otis and Canadian National Railway now an attractive valuation to add? Both dropped around 10% since the month ago when you did a video portion on that. So Otis is a high quality business. It is a business with a recurring revenue business model. Almost 80% of their revenues come in from services base, which is recurring long-term contractual agreements that they have with all these companies. As for Canadian National Railway, it is another high-quality business, and it is almost impossible for you to disrupt that business. Because number one, it is impossible for someone to come into the space and build out all these rails by spending billions of dollars. And number two, they've driven the prices so low that it is almost a natural monopoly at this stage. So for Otis as well as Canadian National Railway, I think Otis is not attractively priced yet. It is still trading at a 23 times earnings, pricing in around an 8% growth. You might want to catch it at a better price. As for Canadian National Railway, I think the company is decently valued today, but of course it is a slow growing one, so don't expect massive outperformance above the S&P 500. The next question it says, would you consider adding to companies such as Constellation or Wolters Kluwer or other serial acquirers which have shown to be good compounders? So for Constellation Software, I think it is a decent quality business. I think the CEO is extremely high quality. He's Mark Leonard. His capital allocation skills have been incredible, and investors in Constellation Software have reaped the benefits of it. And currently, the company is facing negative sentiment because of your AI story. So people are saying that AI is disrupting software, and Constellation Software, owning a lot of these different VMS software companies, is perceived to be disrupted in the future. As for this question, whether or not I'll add into these positions, I think Constellation Software is a company that is interesting, but they have a lot of different software companies under them. So you really have to understand what Mark Leonard's philosophy is, what he's actually doing with all these acquisitions, before you can think about adding. As for Wolters Kluwer, I think the company's business model is a bit too complex. They own a lot of different businesses under them, and it is impossible for you to understand all of them. And for Wolters Kluwer, it is a company that is slower in terms of growth. So for me, it doesn't meet my threshold in terms of growth, and I don't think I'll be adding into Wolters Kluwer. I hope you guys have found this one useful and invest safe.